Good day, ladies and gentlemen, and welcome to the show on this, let's see, it's Friday the 12th of November, 2021. Thank you for tuning in. Glad to have you guys here. Now, what do you do when the world's gone wacky? I'm going to tell you what. It was a time not too long ago where if you had a college degree, you were somebody. And back in those days, a person that was a truck driver, it was like, he's a truck driver. Oh, you got a college degree? Oh, that's great, I mean, you're successful and everything. Oh, you're a truck driver? Now things are switching around, really switching around big time. College degree means nothing now. But being a truck driver means a lot. Now these truck drivers, things are turning around, and okay, so let's get the chart started right here and take a look at this, what's going on. Start the charts right. Let's see, hit record. There, waiting. Why it always takes a few seconds on this computer, I don't know. Come on, start up. There it goes. Video record. Okay, we're going. California DMV nearly doubles capacity for commercial drivers test. Everybody's hopping on board to be a truck driver. You know why? Because they're making really good wages now. And truck drivers the in thing. And, that's where, well, I got all these supply chain shortages. And what about in the ports? I imagine, these ports are still all blocked up and they're not getting anything through. An awful lot of this has got to do with the port authorities and stuff. They're fining, they're putting fines out, they're not allowing them to stack the containers more than 2 containers high. Why not? They can go up 6 containers high. I just don't understand exactly what's going on with all this, but it's clogged up everything. But now you need to move the port. When you get those containers off the ships, finally, and you got to get them on the piggyback of a truck, and you got to have the truck drivers to carry them across the country, to get them to the stores and stuff. These backlogs are going to last a while, and what we're going to see is, we haven't really seen it in the stores quite yet. Maybe a few stores, but the reason why is these stores have a very big inventories they keep. It's called inventory builds. And what happens is when things get cut off from the shipping companies, not that end of the supply chain gets cut off, it generally trickles down. It takes a little while for it to trickle down. There's a trickle down effect. And we should see that this problem that we've had start to manifest itself in the stores, so you guys will be able to see it pretty soon. But then what will happen is when things get going again, it might take a while for things to get going again, then it takes a while for the stores to get replenished again or build up their inventories. Backlog of inventories. Let's get in there and take a look at what's happening with silver today too. Okay. Silver is maintaining these gains that it's made over the last number of days. And this looks really good because what we've done is we've broken through and we've got these new lines of support that are being built. This is extremely bullish for the gold and silver market. And what it's going to do is it's going to change the whole face of this market is going to start to change. People only want to buy gold and silver when the prices go up and going up. You got a sliding price of silver. Silver's really cheap. Down on the bottom. It's down on it. Nobody wants to buy it so much. People, this is a tendency in human nature. They only want to buy things when it's hot and the price is high. You know how most people buy into a market? They buy in when the market's near its peak and it's really hot and everybody wants it. It's a hot commodity. Like the equity and stock markets are really been hot and been on a run for a long time. And you got your crypto markets really hot, been on a run for a long time. Gold and silver are just coming out of the doldrums. They've been down for a long time, been unsuccessful for so long, and the silver supplies out there, when this market starts to heat up, there's going to create demand for physical silver, tremendous demand. And I don't think that there's enough inventory build, again talking about inventory build, to supply that demand if the market starts to heat up. But it's starting to heat up right now. We got silver price popping. It's going up. 25.23 today. Remember just a few days ago, it was like 23 bucks. Now it's 25.23 and climbing. So I hope you guys got some, but you know, it's not too late. You can still get some at your silver dealers, you know, or you can go into, always buy from qualified dealers. Never go out and buy silver from some guy in a street corner, because there's an awful lot of silver out there. It's made in China. It's not really silver. All it is brass with some sort of a silver plating or whatever. It looks just like the real thing. It's very hard to distinguish the difference between it and the real thing. But if you buy from a qualified dealer, you'll be getting the real thing. And always make sure of that. And you never try to get a bargain on silver if you're buying silver. Always pay the going rate. If some guy comes to you and he says, "Yo, I'll give you a 10% discount if you buy my silver," he's probably trying to push you that Chinese-made imitation silver is not real. It's out there. And generally you end up getting that stuff from non-qualified sources. If you're buying from some place like Atmex or Kitco or some big company like a big bullion dealer, you will get the real thing. But you got to make sure of that. Anyway, the silver price is going up today. Let's take a look now at cryptocurrencies. Cryptocurrency today is 2.75 billion. It was up to 2.9 billion, so it's dropped back a little bit. So crypto's cooling off just a little bit. But you know, there's something new in the Bitcoin protocol. I was looking about the Lightning Network, and there's something, I can't remember the name of it right now offhand, but there's some new thing in the protocol that's going to make Bitcoin very, very scalable. I'm going to do a show about it. It's like the Lightning Network, but a little bit different. I can't think of the name of it right now. It's just on the tip of my tongue. But it's going to make Bitcoin so scalable when you combine that new thing, I can't think of the name of, with the Lightning Network, that it's going to start to make some of these other altcoins superfluous. And you know, an awful lot of money might move, more money might move into Bitcoin out of these altcoins at some particular point. I'm thinking about doing a show about that on the Delta Report. But let's move on today. Bitcoin is at $63,313. Let's take a look now at Dow Jones, which is up 96 points on the day, 35,925. Dow Jones has set all-time highs. It's a markedly big bubble, you know. How much bigger can they blow these bubbles? We're going to have to wait and see. Let's take a look now at crude oil. $80.62. It's down 1.19% today. So we've seen a fall off in crude oil. Let's take a look at the 1 month chart. Yeah, we're seeing crude oil starting to fall off some. Okay, so now let's take a look at the MOVE index today, and it's at 78.31 and rising. It's getting up near 80, guys. We gotta keep our eye on that MOVE index. Bonds and rates today, we're looking at a mixed bag. Short end is rising just a little bit, long end is falling just a little bit, but it's just small. So we're looking at a US 10-year at 1.54, and we're looking at a US 30-year at 1.91. We still see an inversion between the 20 and 30-year, but it's getting larger. It's now 1.95 on the US 20-year and 1.91 on the US 30-year. Bond yield inversions, you know, are a sign that something big's coming in the financial system. Most times. Generally, it's a recession. It signals a recession. Okay, 95.12 for the US dollar, and it's going along sideways today. But just because the dollar's going up on the USDXY, it does not mean that the dollar's strong. We just put in a CPI of over 6%. It was 4%. We were worried. That was a few months ago. I think it was 4.25. Now it's over 6 and climbing. And that's inflation, and the inflation's increasing. It's not transitory anymore, and we got to keep our eye on this inflation, but that's a hidden tax, and it's going to be pushing at bond yields to rise. We're going to have to wait and see if bond yields start to rise, but the Fed's not going to let them rise. They're not going to let them rise very far, let's put it that way. They might rise a little bit, but the Fed's going to put a damper on them rising very far because they can't afford to have bond yields go too high now. They'll do whatever they have to, the Fed, if bond yields start to go too high. If you start to see that U.S. 10-year approaching 2.5%, the Fed will do what's called yield curve control if they have to. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.